In a world where economic stability is constantly under threat, today's news highlights significant developments in cryptocurrency and global finance. We will explore Bitcoin's recent price plunge, the implications of regulatory changes in the EU, and institutional adoption of blockchain technology. Here are today's top 10 stories you need to know. The cryptocurrency market is currently navigating a period of uncertainty marked by volatile price movements and regulatory scrutiny. Investors are grappling with fluctuating values and a lack of clear direction. This environment has led to mixed sentiments among traders, with some expressing optimism while others remain cautious. The ongoing discussions about regulatory frameworks are adding to the market's instability. As various countries implement new laws and guidelines, the future of cryptocurrency remains in flux. Analysts suggest that investors should stay informed and prepared for potential market shifts. Education and awareness are becoming essential tools for navigating this complex landscape. While challenges persist, opportunities for growth and innovation continue to emerge in the cryptocurrency space. As the market evolves, stakeholders will need to adapt to changing conditions and refine their strategies. China is continuing its efforts to expand the digital Yuan program as part of its push towards a cashless society. Recent developments indicate that the government is accelerating the rollout of its central bank digital currency, CBDC, to enhance financial inclusion and streamline transactions. The expansion aims to promote the use of the digital yuan among consumers and businesses alike. As the digital currency gains traction, it could reshape the country's financial landscape, challenging traditional payment systems. The implications of this initiative extend beyond China's borders, as it may influence global discussions on CBDC adoption. Observers are keenly watching how this expansion will impact China's economy and its role in the global financial system. The digital yuan's success could set a precedent for other nations considering similar initiatives. As the program develops, China is likely to continue pushing forward with its digital currency agenda. XRP, the digital asset linked to Ripple, is currently grappling with significant market challenges. Recently, the cryptocurrency experienced a sharp decline in its price, prompting alarm among investors and traders alike. Analysts attribute this downturn to a combination of heightened regulatory scrutiny and shifting market sentiment, which have created an atmosphere of uncertainty. Ripple's ongoing legal battles with the U.S. Securities and Exchange Commission have compounded these issues, casting a shadow over XRP's viability as an investment. The ramifications of XRP's struggles extend beyond its own market performance, potentially impacting investor confidence in the broader cryptocurrency ecosystem. As regulatory frameworks evolve and cryptocurrency adoption continues to grow, XRP must demonstrate resilience to regain trust. Investors are urged to remain vigilant and informed about both Ripple's legal outcomes and market trends. Looking ahead, XRP's ability to navigate these turbulent waters will be crucial in determining its future trajectory and market standing. In a significant development, Binance, one of the largest cryptocurrency exchanges, has received approval for its operating license in the European Union. This milestone is expected to enhance Binance's legitimacy and operational capabilities within the region. The approval comes amid a wave of regulatory scrutiny faced by cryptocurrency exchanges worldwide. Binance's efforts to comply with regulatory standards signal a shift towards greater transparency in the industry. This license will allow Binance to offer a wider range of services to its European customers, potentially increasing its market share. Analysts view this development as a positive step for the cryptocurrency market, as it may encourage other exchanges to pursue similar licensing. As Binance integrates into the EU regulatory framework, its operations will be closely monitored to ensure compliance and stability. The implications of this approval could reshape the competitive landscape of cryptocurrency exchanges in Europe, paving the way for a more regulated environment. Ethereum's price forecasts are gaining traction as experts weigh in on its potential trajectory. Predictions are now reaching as high as $12,000, reflecting a surge in optimism among market analysts. This bullish sentiment is largely driven by the increasing interest in decentralized applications and the rapidly expanding DeFi ecosystem, which has seen significant growth in recent years. Analysts emphasize that Ethereum's underlying technology, particularly its smart contracts and scalability solutions, positions it favorably for future growth. Institutional investments are pouring into the DeFi sector, suggesting a shift in mainstream financial strategies that could significantly benefit Ethereum. The excitement surrounding Ethereum's potential has sparked renewed interest from both retail and institutional investors, which could create a more stable market environment. While some experts caution against speculative bubbles that may arise, the overall mood remains positive. As Ethereum continues to evolve, its price predictions will likely influence investment strategies and market dynamics, making it a focal point for investors in the coming months. The Shiba Inu cryptocurrency has recently caught the attention of investors and analysts alike as they scrutinize its distinctive price patterns and potential for future growth. This renewed interest follows a significant surge in trading volume and social media buzz, which has propelled the coin into the spotlight. Many experts are drawing parallels between Shiba Inu's market behavior and successful altcoins like Dogecoin, which previously experienced explosive growth driven by community engagement and speculative trading. The volatility exhibited by Shiba Inu has sparked lively debates among traders regarding its sustainability and long-term viability as a meme-based currency. While some investors see opportunities for substantial gains, others caution about the inherent risks associated with such speculative assets. The excitement surrounding Shiba Inu mirrors broader trends in the cryptocurrency market, where meme coins often attract fervent interest. As the Shiba Inu phenomenon continues to evolve, market analysts predict that its trajectory will depend on both community support and regulatory developments, making it a focal point for future investment strategies. Iranian authorities have recently intensified their crackdown on cryptocurrency operations by seizing a large quantity of digital assets believed to be linked to illegal activities. This significant operation is part of the government's broader strategy to regulate the burgeoning crypto market, driven by rising concerns over money laundering and evasion of international sanctions. Iran has been grappling with economic challenges, making the allure of cryptocurrencies as a means of financial freedom increasingly appealing to its citizens. However, the government is wary of losing control over this decentralized financial system. The seizure of these assets could have profound implications for the local crypto economy, potentially deterring investors who are already wary of government intervention. Moreover, this move may ignite debates about the future of cryptocurrency regulation within Iran, especially as the country seeks to navigate its economic landscape under the weight of international sanctions. As the situation develops, it remains to be seen whether Iran will adopt a more open stance toward digital currencies or continue its restrictive policies. The upcoming months will be crucial in shaping Iran's regulatory framework for cryptocurrencies. The adoption of decentralized finance, or DeFi, by institutional players is gaining significant momentum. Recently, the launch of Orbs Institutional marks a pivotal step in making on-chain execution infrastructure accessible to trading desks and custodians. This new offering promises transparency, competitive pricing, and enhanced control over assets, addressing many traditional finance concerns. Institutional investors, who have historically been cautious about DeFi due to regulatory uncertainties and security risks, are now increasingly exploring this innovative sector. The Liquidity Hub, a key feature of this initiative, aggregates liquidity from decentralized exchanges, streamlining trading processes and reducing costs. As institutional interest in DeFi rises, the demand for reliable infrastructure is surging, fueling a transformation in financial operations. This shift could lead to an era where traditional financial practices seamlessly integrate with blockchain solutions, enhancing efficiency and trust. Furthermore, as more institutions participate, we may witness increased regulatory clarity and innovation within the DeFi space. Looking ahead, the ongoing evolution of DeFi infrastructure is likely to reshape trading dynamics and redefine the relationship between traditional finance and the emerging crypto economy in profound ways. In a decisive move, the European Union has announced stricter regulations for cryptocurrency exchanges and operations within its member states. This new regulatory framework aims to enhance transparency and reduce risks associated with digital currencies. The decision comes amid growing concerns about financial crimes linked to cryptocurrencies, including money laundering and fraud. The recent surge in crypto adoption has outpaced existing regulatory measures, prompting the EU to act. With these regulations, exchanges will be required to implement more rigorous Know Your Customer (KYC) protocols, ensuring that user identities are verified and tracked. This heightened scrutiny is expected to deter illicit activities, fostering a more secure trading environment. The impact of these changes could be profound, potentially affecting the trading practices of many operators in the region. Smaller exchanges may struggle to meet compliance requirements, leading to consolidation in the market. As the regulatory landscape evolves, cryptocurrency businesses will need to adapt quickly to remain compliant, which may stifle innovation in the short term. This shift also reflects a growing recognition of the need for oversight in the rapidly changing financial environment. Looking ahead, the EU's regulatory approach may serve as a blueprint for other jurisdictions contemplating similar measures. Bitcoin has recently experienced a significant drop, falling below the $63,000 mark. This decline is part of a broader trend in the cryptocurrency market, which has seen a 4% reduction overall. Analysts are attributing this downturn to multiple factors, including market corrections and bearish sentiment among traders. The cryptocurrency's fall below critical Fibonacci levels has raised alarms, bringing it closer to retesting its June low of around $59,000. This price level is significant as it represents a psychological barrier that could trigger further sell-offs if breached. Ethereum and XRP also suffered losses, each declining by approximately 5%. This widespread downturn reflects growing uncertainty among investors who are increasingly wary of potential regulatory changes and macroeconomic factors impacting digital assets. The volatility in the crypto market has left many questioning its long-term viability, raising concerns about investor confidence and the potential for deeper declines. Looking ahead, traders are keeping a close eye on Bitcoin's performance. A recovery above the $64,968 level could signal a turnaround, suggesting that optimism might return to the market. However, analysts warn that if bearish trends persist, Bitcoin could face significant challenges ahead. As the market grapples with these uncertainties, the next few weeks will be crucial for determining the trajectory of Bitcoin and the broader cryptocurrency landscape. Thank you for watching. Which story shocked you the most? Let us know in the comments below. Don't forget to like and subscribe for more updates on global news.